Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about United Company RUSAL International Public Joint Stock Company, latest report. United Company RUSAL provides a wide range of businesses and services across various sectors. The company's primary focus lies in the production and sale of aluminium and related products in Russia. Its operations are divided into four main segments: aluminium, alumina, energy, and mining and metals. The aluminium segment involves the fabrication of aluminium and aluminium alloys into semi-finished and finished products. This includes billets, rolling slabs, foundry alloys, wire rods, high-purity aluminium, and wheels. The company also offers foil and packaging materials, corundum, gallium, and silicon products, as well as aluminium anodes for cathodic protection. In addition to its core aluminium business, the company engages in various other activities. These include smelting services, repair and maintenance, finance, electric power generation and transmission, coal mining, and trading activities. United Company RUSAL also provides equity investment in Norilsk Nickel and HWNM. The company's products are sold primarily in Asia, Russia, the Commonwealth of Independent States, and Europe. With a presence in multiple sectors, United Company RUSAL plays a significant role in the global aluminium market. United Company RUSAL, International Public Joint Stock Company, maintains a market capitalization of $65 billion, broadly in line with the industry peer group. United Company RUSAL, International Public Joint Stock Company, trades at a lower price-to-book ratio of 0.7 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company maintains a moderate leverage profile, with liabilities making up 49% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have increased over the past 5 years, which is normal for a growing company. Asset and equity growth have outpaced liabilities, suggesting balanced and healthy expansion. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be categorized into 3 main areas: external factors, market and sales, and financial performance. External factors such as volatility of currency, commodity and financial markets, geopolitical instability, and potential sanctions imposed by countries have a significant impact on revenue. These factors can lead to fluctuations in sales channels, production raw materials, and supply chain organization, ultimately affecting revenue growth or decline. In the market and sales category, sustainable supply chain management, ESG transformation, strategic business planning, and compliance with laws and regulations are key drivers of revenue growth. On the other hand, limitations in sales channels, availability of production raw materials, and possibility to organize supply chain can lead to revenue decline. Financial performance also plays a crucial role in determining revenue growth or decline. The net value added, total net sales at year-end, and income from investments in associates and joint ventures have shown fluctuations over the years, indicating that financial performance is a significant driver of revenue growth or decline. Overall, these factors interact with each other to impact revenue growth or decline, making it essential for companies to monitor and adapt to changes in these areas to maintain stability and growth. Net income experienced a significant fluctuation in 2025 compared to the previous year. Initially, it increased by 9% in the early part of the year. However, this trend was short-lived, as net income plummeted by 117.5% towards the end of the year, resulting in a substantial loss of $1,155 million USD. The decline in net income can be attributed to various factors. One reason is the decrease in profit margins across certain production areas. For instance, aluminium powders production saw a 15% drop, while silicon production fell below its 2024 level. Additionally, some areas experienced reduced profit margins due to increased costs and operational inefficiencies. On the other hand, there were instances where profit margins improved. The commercial operation of inert anode technologies for aluminum production led to cost savings and enhanced efficiency. This resulted in a temporary boost to net income. However, these gains were insufficient to offset the overall decline in profitability. The analysis of Norilsk Nickel's financial performance reveals a consistent trend of generating positive operating cash flow. The data presented on various pages confirms this assertion, with page 17 stating that the company is indeed producing positive operating cash flow. This conclusion is further supported by page 36, which also indicates a positive operating cash flow. The magnitude of this positive cash flow can be seen in the figures provided on page 180, where the operating cash inflow stands at $1,548 million and net operating cash flow at $1,508 million. Similarly, page 184 shows that the company's net cash from operating activities is a substantial $1,278 million. These findings collectively demonstrate that Norilsk Nickel is successfully generating positive operating cash flow, indicating a strong financial position for the company. The financial performance of various segments and regions within the company has been mixed. On a positive note, several areas have shown significant improvement. The aluminum segment recorded a high segment result margin of 9.9% and an EBITDA margin of 14.1%. The alumina segment also performed well, with a segment result margin of 15.7%. Additionally, the SAYNAL production site has been a standout performer. Innovative initiatives have also contributed to the company's success. Digital transformation and innovative development have yielded positive results, as have low-carbon footprint solutions for packaging and industrial artificial intelligence department projects. The Siberian Federal University collaboration has also shown promise. Furthermore, various facilities with integrated organizational safety management structures have been implemented. In terms of regional performance, Russia has seen a 25% increase in social investment year-over-year. Regions where the company operates have also witnessed an uptick in social projects, including initiatives to enhance urban infrastructure, healthcare, education, sports, and cultural entertainment. However, not all segments and regions have performed well. The energy and mining and metals segment has struggled, with no data provided for this reportable segment. The aluminum segment's performance was particularly poor in 2024, recording a negative result margin of -4.9%. The alumina segment also saw a decline in EBITDA from $801 million in 2024 to $626 million in 2025. The management of this company is committed to a comprehensive approach to sustainability. They aim to achieve a zero balance between greenhouse gas, GHG, emissions and removals by 2060 through various initiatives such as climate-related projects and low-carbon products. This commitment to sustainability is reflected in their targets for reducing direct and indirect GHG emissions. In addition to environmental concerns, the company prioritizes social responsibility, investing in charitable projects and community development programs that focus on improving living conditions in local communities. They also emphasize employee well-being, with a focus on occupational health and safety, staff relations, and community support. The company's strategy is centered around innovation and technology, with investments in digital transformation and import substitution through Russian IT solutions. This approach aims to drive structural adaptation of the Russian economy while promoting sustainable development. Overall, the management's outlook is focused on achieving a balance between economic growth, social responsibility, and environmental protection. You see RUSAL's acquisitions and divestitures. A summary: the company has made significant acquisitions to expand its operations. Notably, the acquisition of Norilsk Nickel for USD 13,230 million is a major highlight. Additionally, RUSAL increased its stake in Bogeter Coal LLP to 35% from a 50/50 joint venture. The company also acquired interests in several alumina refineries, including Wenfeng and Pioneer Aluminium Industries Limited. In terms of divestitures, the shutdown of alumina production at Nikolaev Alumina Refinery is a notable move. RUSAL has also reduced its stake in Bogeter Coal LLP to 35%. Furthermore, the company redeemed several bond series, including Chinese yuan bonds and commercial non-convertible interest-bearing bonds. The acquisitions demonstrate RUSAL's commitment to expanding its operations and increasing its market share. The divestitures, on the other hand, suggest a strategic decision to focus on core business areas and reduce liabilities. Overall, these transactions reflect the company's efforts to adapt to changing market conditions and optimize its portfolio. The company has a history of paying out dividends to its shareholders. According to the provided information, the company paid interim dividends in 2023, amounting to $915.33 per share. This indicates a commitment to returning value to its investors through dividend payments. Furthermore, multiple references within the document confirm this practice, with statements on pages 216 and 172 explicitly stating that the company has indeed paid dividends. There are concerns about inventory buildup and supply chain disruption in the company's operations. The data suggests that inventories have been increasing over time, with a significant jump from $7 million to $36 million between 2024 and 2025. This could indicate potential issues with managing stock levels and may lead to further costs down the line. In terms of supply chain disruption, geopolitical instability and unpredictability are major concerns, as highlighted in page 224. Additionally, there have been a large number of customer requests for compensation due to damaged containers used to deliver products to Asia and China. Economic sanctions also pose significant limitations for sales channels, further exacerbating the issue. However, it's worth noting that these concerns appear to be relatively limited compared to other areas of concern. The aluminum segment, in particular, seems to be unaffected by inventory buildup or supply chain disruption issues. Overall, while there are some concerns, they do not seem to be a major cause for alarm at this time. That concludes the financial summary for United Company RUSAL International Public Joint Stock Company. Feel free to comment below, and I will be happy to answer them when possible.